Hey guys, what's going on? Eric here with Excel 3PL. Thanks again for jumping into part two. We're actually going to get into the math and I'm going to show you how and why this is such a powerful concept to start doing drip feeding instead of the traditional model. So again, the traditional model that I've seen, you have a purchase order of, let's say, 2,000 units that you're getting from your supplier from China or wherever it comes from. What I see is a lot of sellers, they'll send 1,000 units directly into Amazon and those goods are going to sit there. And again, that's the dumb tax for Amazon FBA sellers because Amazon charges so much more for storage than a 3PL warehouse, or particularly us as Excel 3PL, what we charge. So just changing a little bit by doing a drip feeding shipment every week into Amazon instead of sending a big chunk all at once, you can save a ton of money. So in this case, we have a seller who's selling $422,000 a year on Amazon. They have savings of almost $6,000, which is 1.4%. Guys, what we're going to do, a rule of thumb, is everything in yellow. You can change everything in gray, don't touch. We're going to go through real fast. Put in your master carton size in inches, your units per carton, calculated field of cubic feet. This is to help calculate the number of cartons per pallet. Don't worry about that. Then put in your expected sales in units per week. So I have 200 units per week. Again, make sure it's week, not month. Unit sale price of $30. Put your number in there. Current units at Amazon, I said 1,000. Expected growth, 20% year over year. And then Q4, if you're going to double your sales during Q4, put 100% here. So if you normally sell 200 Q1 to Q3 and you want to bump that up to 400, put 100% there. If you do 50% there, it would be 300 in Q4. For your supplier information, minimum order quantity, and then is your smallest amount that you can order from your supplier, your desired order quantity. If you get a price break for ordering a little bit more, this is the more important number, so make sure that number is correct, what you would actually order from the supplier. And then manufacturer lead time, 4 weeks or a month for manufacturing, and then 8 weeks for sea freight. If you're doing air freight, put 2 or 3, whatever it may be. And then all of this is going to be calculated. So we got safety stock, which is the amount that you want on hand when your next purchase order arrives. Don't need to worry about cartons per pallet or units per pallet. Again, most people will send half of their shipment, so that's what I have here. If you want to put a different number here, feel free to do that. And then I'm calculating the ideal drip feeding amount here. We're going to send to LTL and then just some random costs, not random, but some estimated costs for the cost to send goods to Amazon. LTL on a pallet is $100 per pallet. The average cost to send a carton to Amazon is $10 per carton. Okay, so we have a pretty big seller here, almost $500,000, and they have 1.4%. We're going to get into the details here for how this works. So on the sale and inventory data, you're going to see the expected sales. Every column is a week, and then we have total expected sales in units and in dollars here, and then your projected inventory amounts. This section is kind of cool here because you can use it for inventory planning. You can say, hey, if I want goods to land on this date based on my sales, you can see the date that you need to place your PO by. So traditional, again, sending 50% directly to Amazon, you're going to be able to see the cost to send the number of units that you're sending. So you're sending 1,000 at a time here versus drip feeding. You're sending 160. Sometimes during Q4, you're going to see a little bit more. You're going to send 480 or 320. Then you're going to see your shipment cost, which is using the LTL or the SPD shipment. That's all calculated for you. Your 3PL storage cost, which is how much you pay to store stuff with us. Amazon storage cost, which is, again, the biggest killer of your margin that a lot of people don't realize because Amazon doesn't have reports about it. And then the total and aggregate cost. And then you're going to be able to compare that and go week by week to compare that to drip feeding and see how powerful this is. So I want to do another quick example. We have 30 seconds left, but let's just say you're a smaller seller and you're selling 20 units per week and you have a minimum order quantity of 1,000 is what you order. Let's say you have 500 units at Amazon and, let's see what else. Let's do that. So here's the craziness, guys. If you're a smaller seller, you're going to end up saving even more. So in this case, the smaller seller selling $42,000 a year saves 4.3% on their money. Thanks, guys. Have a good one.